The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everybody. It's Brian Caprice from Keep Trading Simple. Welcome out today to our What's Hot and What's Not. Very excited to have everybody else out here today. This is it's very interesting times that we're dealing with right now, and interesting news out there about states reopening, what could it do for the economy, and then also at the same time on kind of a, more global level. Not only are we hearing kind of rumblings lately about the, Trump and stage one kind of negotiations and trade wars with China, but now we're also hearing other countries getting into trade wars with China. And there was some news last night about China and Australian beef and halting imports. So kind of some interesting things going on in the markets these days. And again, perfect place to be out here Tuesday morning. Again, some nice movement yesterday. Let's just dive right in. For those of you that are kind of unfamiliar with who I am, obviously, President, CEO, Keep Trading Simple, and what my goal is to really help simplify trading for both new traders and experienced traders. What I've seen over time is that people make trading extremely complicated. They make it so difficult that they mess things up. And my goal is really to kind of help take a step back, look at the kind of fundamentals of actually technical trading, and really helping people create systems that work for themselves, right? So I've created a couple different strategies. I've been trading since about the 2001 time period, right around that tech bubble. So I've seen the markets do a lot of different things. I've seen a lot of different evolutions of kind of what the markets look like, what technical analysis looks like. With that being said, there's a lot that's actually changed in that time period. I've created a number of different systems that are particularly based off of Nadex, 30-minute trader, really how to not spend all day in front of a computer, some 5-minute binary courses. I have a high volatility trading course, and each week I keep saying I'm going to add it, and I keep forgetting to do it to this bio. What I really want you guys to get from today's presentation is there are different ways to do things, and my charts may look a little bit different than what you guys are used to. I'm what's called a price action trader. I don't use a lot of indicators out there. I understand how they're used and how people are not only using them correctly, but also incorrectly. So if you hear me say anything that's kind of like, take a note of it. You guys are more than welcome to kind of bounce questions off of me, whether during this presentation or later on down the road, right? You can always send me an email and ask me a question about something I said today. I'm totally open for that. And again, at the end of today, I want everybody to be able to pull what we're talking about. So those are the little ones. Actually, the little one is she's getting really into tablets. She's also really likes when daddy trades. So I may have a little trading prodigy on my hands. And actually, the one on the left, he's actually really starting to get into trading and looking at charts. And he is actually, although obviously he doesn't have his own account, he's actually getting very, very into Nadex as well. I've kind of taught him some things about risk, and he's already kind of grasped the concept. He actually just turned 10 a couple weeks ago. So trading is something that a family can definitely do together. So I recommend if you got little ones, teach other people how to trade as well, right? Let's dive right in. There's a lot to cover today. So let's start with the Nadex risk disclaimer. Trading on Nadex involves risk and may not be appropriate for all investors. Trading can be volatile, and investors risk losing the cost of another transaction, including fees. The information presented here within this presentation is for information and education purposes only, okay? This should not be considered an offer to buy or sell any instrument or financial instrument on Nadex or elsewhere, and any trading decisions that you make are solely your responsibility, and you're trading at your own risk. Past performance is not necessarily indicative of future results, and Nadex contracts are based on underlying asset classes, including Forex, stock index futures, and commodity futures. Nadex is a registered trademark of the IG Group. And actually, I do have to change that one as well. Man, I thought I made these changes last week, but obviously I did not. One of those things. I'm going to change it right now, right there. 2020, we're good to go. All right, so let's cover today's agenda, okay? First things first, I'm going to cover the upcoming events, both what's happened this morning, and again, the markets are already starting to move off of it, right? And then we're going to cover the indices, kind of look for different levels. We're going to cover Forex, and I actually have a couple questions for you guys today. One of the things that I'm seeing my students in particular, they're trading a lot more of these of the knockout brackets. I'm looking for ways to be able to show you guys and help illustrate the power of knockout brackets. So I have two different things I want to ask you guys, kind of two different ways I've put it on my charts, and I'd like to get some feedback. So if you guys can type in chat later today when we get to that section, particularly in the currencies, how you like to see the knockouts shown on the charts. Next week, what I'll do is I'll go ahead and actually put those on the charts for you so we can get a little bit better of a graphical representation of where the knockout brackets are in relation to what I'm talking about. And then lastly, we'll cover commodities. Obviously, gold, oil, and silver, the three that we will cover. Been very, very interesting. And as I mentioned last week, I think oil is getting into a very interesting time frame. This time last month, we saw the May delivery contracts start to get crazy. And we saw price come down actually to below zero because nobody wanted to take physical delivery of oil. We are now starting to approach about the same time when that kind of drop off really started to happen for the June contracts. And although people are going outside, it's kind of interesting to look at a chart and say, could we start to be expecting some type of a similar crash? Maybe not going to zero, but maybe starting to kind of crank back down again. And again, Nadex is a great place to be able to trade that. So I want to make sure we cover that and get enough time. And I actually have some charts from Daily FX up there that I've marked off, and we can look at those. All right. So first things first, let's actually pull in news and talk about news. Okay. So I'm using Forex Factory right now. There's many different websites out there. Daily FX is another one that I'm using. As I mentioned, I do like this website because I'm able to kind of keep a scanner at the top to kind of get a read on what the markets are doing, at least in currencies in the last 24 hours. Some important news that we had earlier today was these CPI numbers, and you can see both core and CPI. You don't need to know what they have to be. If you do want to know, you can always click on the detail and get a detailed breakdown of them. But know that the market had forecast in a specific drop, and they actually came in worse than what the expectation were. And that always can set the market moving. So it's important to know when these things are. The worst thing that you want to do is get into a position, have it be almost to your profit target or where you're extremely happy with where the movement happened, and then all of a sudden news to step in, and it goes against you. You're like, wait, what just happened? Well, it's news. It's one of those things that every trader needs to incorporate into their trading. For the most part today, we have a little bit of late night data with Australia and New Zealand. For the rest of the week, tomorrow morning will kind of be a big day. We have this preliminary GDP number, and it's quarter over quarter. So it's absolutely, without a doubt, it's going to have to start incorporating in COVID-19 and the effect that it has on the pound. And again, you may not trade currencies, but understanding the impact of other countries will affect both affect our indices as well as our commodity pricing in the United States. So it's important to kind of get those. Now, do you need to know manufacturing? Do you need to stay up till 2 a.m. Eastern? No, we just kind of keep a read on this one. And again, we'll see the spillover effect. So 2 a.m. tomorrow, we're seeing some pound news. 9 a.m. tomorrow morning, we got Fed Chair Powell speaking. That always has the potential for some major fireworks. It's like tearing a box of dynamite, and the question is whether there's going to be a spark around it or not. This could be a big mover tomorrow morning when we talk about stimulus. All the talk right now, last week, the theme of the week for media was, we're going to negative interest rates. You guys may have heard it. Oh, the first time ever the United States is going to negative interest rates. The response this week has been different. The Fed says, we are not going to let that happen. We have no plans to go that direction. We'll do everything in our power to keep it from going there. Kind of backstopping banks, right? That's a major shift, and that's why we saw some movement yesterday. It'll be interesting to see what he has to say on Wednesday morning, and that's 9 a.m. That's before the market opens. And then for the most part, we're pretty much flat for the day. Obviously, on Wednesday, we have 10:30, that oil inventory report. Very, very curious to see what the oil inventory report will be this week as well, to see if we will continue kind of that, whether we'll continue kind of the bullish rally, or if that June delivery contract is going to be what's on everybody's eyes, and this thing is going to go back down to zero. And just think what happened last time when that tanked through the floor, right? When it literally went from 15, mid-teens all the way down to zero. Was there some great trading opportunity in that? Absolutely. If we can see something similar starting to unwind, could there potentially be a trade this month as well? Sure, potentially, but we got to be able to see it in the chart. So again, I'm very interested to see. That's 10:30 on tomorrow morning. And then we're more or less flat, as I mentioned. Late tomorrow night, we have the unemployment numbers coming out of Australia. Now, as you can see, Australia previously was at 5.2, and we're supposed to go up to 8.3. If you remember our numbers from last Friday, we were much higher than the 8.3, right? Australia is a little bit ahead of where we are, right? Their employment change, they're not seeing millions of numbers, right? They're seeing, 550,000. So a little bit different there. There are some great trading opportunities in Australia at night. It's actually one of my favorite times to trade the Australian markets, whether it be in currencies or Nadex. I really enjoy both of them. That's a great number. This is their version of non-farm payroll. It happens on Wednesday nights, okay? Thursday, we're kicking into the unemployment claims number. Now you can see the unemployment claims number now is considered an orange. And last time, we don't even have a forecast for it, but last time we were just over the 3 million number. Now remember, this unemployment claims is the first time somebody's filing, okay? I'm very curious to see what this comes in as. As bad as this number has been, it's actually provided a lot of bounces in the market to the top side. A lot of people, basically short covering, right? People are like, oh, I got to get short, and then all of a sudden it goes against them. We're going to see what it looks like this week. As soon as we get that forecast number, then that will give us a little bit better of a read. Obviously, this number is going to go down. There's only so many people that can do first time. I know that there are systems that are still messed up. I know in Maryland, the system is still completely broken here. It's been a nightmare. Hearing some of the stories of friends and things, it's absolutely just unreal. And then again, 11, we have the Canadian information coming in. Friday, we have for Europe. Now, the euro is having all kinds of major problems, and we're talking about German preliminary GDP. Now, here's why this is important. And again, you may not be a currencies trader. This is extremely important this week. If you guys are not looking at this, you're not doing yourself justice. I'm not saying waking up at 2 a.m., but you absolutely, without a doubt, should be looking at this. Here's why. Last night, and again, it would be scrolling down here farther. I don't see it right now. They're talking about squabbles between Germany and the EU. And they're talking about the European Union suing Germany for some, disputes in the German court and all these things. If you were Germany and you are predominantly the driving force and the check writer for the European Union, and all of a sudden you are getting sued by the European Union, do you think we may have a Grexit? Right? I mean, Great Britain left, right? And that gave us, Brexit. Could we have a Grexit with Germany leaving the European Union because they're unhappy that they are being sued, even though they write the checks and they are the majority of the economy? I mean, I'm not a conspiracy theorist, but I will look at different, options out there. And if I'm being sued by somebody that I'm a part of, and I'm not happy, and again, Germany's not been happy for a while, what are the further implications of that down the road? If the European Union is unhappy and Germany decides that, hey, we're leaving, what does that do to the euro currency? What will that do to U.S. trade? What type of trade agreements? That could be an absolutely just amazing time for a trader. Okay, so again, that's why I'm kind of very curious to see what Germany looks like. If this number is really, really bad and Germany's unhappy and they're getting sued by the euro, this is like a bad divorce happening right here. So very, very exciting, right, for, looking to see what's happening in the world right now. And again, in very difficult times is where these kind of, for lack of a better word, marriages get tested. Okay, so again, whenever you start bringing the courts in, whew, things are getting crazy. So a lot of stuff. And then at 8:30 a.m., we have retail sales numbers. And again, they're expected to be really, really bad. The market has already factored those in. So it's not like we can say, oh, it is 11 and then go shorting the market. That could be very dangerous because the market has factored that in. But if these two numbers are not as bad as expected, we could see a bounce on Friday and end the week on a green, which again is not uncommon. Not uncommon. A lot of traders like to end that week on a green and again, going positive into the weekend. And that's when a lot of things happen. And then again, we're followed up by consumer sentiment. So pretty interesting week as far as events happening. A lot's going on inside of the markets. All right. So let's go over and dive into charts, and we will start over on the indices. So again, just kind of a little bit of a warning. Remember, my numbers over here will be slightly off. Again, I'm using ECN-based data to trade these through actually a overseas funded account. So they'll be off slightly. So just kind of, again, if you're going to take any of these trades or look at any of these setups, please make sure you do the homework on your own. Whether it be in futures or on Nadex, make sure you use those prices. I'm off by about 5 or 6 just because it is ECN-based data. All right, so where we are, again, on a 4-hour position, okay? We've marked this top zone off for a while. I would call it a supply zone. It's where we've seen sellers step into the market previously. Now, looking at the NQ, right, the NASDAQ, all I see is price rallying. On the daily, we can see we are almost all the way back up to where these all-time highs existed. Now, again, we're in COVID-19. Everything is horrible. People are getting laid off, but yet this is continuing to go higher and higher and higher, okay? Dropping this down to some lower time frames, you can see we're starting to approach those levels. And actually, I'll drop down here to an hourly. You can see that we have a sell zone sitting right above where we are. Now, this sell zone, okay, for those of you that are trying to find this on your own charts, this sell zone is actually sitting back here off of the gap that we had, okay? This gap occurred February 21st, if you guys are looking to draw it on your charts, and you're able to draw it. It's the second to last candle on the hourly, okay? Now, this is an area where we know that price closed, and the next thing you know, bam, we started this gap, and it continued to push down. Gaps are typically great areas of imbalance inside of the markets. So we're starting to push up in that zone, and we're not there quite yet, all right? But that area, I'll mark it off, is approximately around 9,400. It's inside of that range. Again, look at your own charts. There's a potential sell for me up in that area. Okay, now, couple different ways you can play this when we get up there this week. One thing will be is look to see where we are with news. Is a news release about to come up? If price rallies into that zone right before news, that tends to be a pretty good time to get short that position, even if it's right before news, because the market always knows kind of ahead of time. If it rallies up, I'm looking to get short. Now, there's a couple ways to play this. You guys can play this in binaries. Obviously, giving you binary prices or looking at potential binaries right now. Price is not there. It's got some room to run. It's a little bit harder to do. We could look at call spreads. Those kind of have the same situations. But right now, knockouts are probably the best way to kind of look at this because they had that kind of duration benefit in there with them. Now, we know that this price is approximately, whoops, I didn't want to move that one. I wanted to move this one. Whoops. Let's get that out of the way. Let's move that up. We know that price is approximately going to be up in here. So the way that you look at these is pull across and look at your knockouts and see, ceiling wise, what would get us pretty close to that range. Again, you don't want to take additional risk or kind of hurt yourself. And there may not be any touch brackets that match up right now, but it's always nice to kind of look at that one. And that's what I did last week. We wrote down a bunch of touch brackets and wanted to see how they did. So we know the distal side of this is about 94.52. You can see that right now it doesn't look like anything super close. 94.36 is about the closest that we have, which is about on the chart right about where my cursor is right now. So it's about halfway through that sell zone. There's a potential trade there, but there's still a little bit higher that the price could run before it actually turns and flips. So my recommendation, if you're looking to get short, if price rallies back up into that hourly gap, and again, most gaps get filled. So, I mean, if you wanted to take a long, there is potential longs here as well. I would probably wait till the next touch bracket to break kind of goes through. The indicative value right now for Nadex is at 93.03. 93.46 right here, this KO11, that would be the first knockout to get blown up on the way up, as well as 93.76 would also be broken. The only two that wouldn't be would be these two guys up here. This one at 94.06 is just slightly inside of that zone. So KO11, KO18 would both break, give us new prints, and those would be the positions that we'd be looking to get short. Okay. Hopefully we get that sooner in the week. That way we can take full advantage of the number of days left in these knockouts. But I think those would probably be good ideas. It's what I'm going to be looking for later in the week. And again, it will matter what kind of news is coming up and where we are. And again, drop down and look for those. But that's a nice area that I think there's some potential shorts off that range. And again, if you are interested in taking those, make sure you have done your homework, you like the charting, match your prices, and make sure you're okay with the risk profile before you guys get in that position. On the downside, there's a nice area down here as well. You can see that last time price came up at base, it touched and exploded off. It touched again and exploded off yet again. Again, this is done on the hourly, and that price is approximately floating down in this range at the 91.42 area. Now, Nadex bracket wise, the knockout bracket wise, there are some positions down there, but it also needs move a little bit further. There's this 91.96, which is way up here. It's a little bit too far away. As this goes down, you can see over here, this is at 92.86. We're what? About 30 points away from being able to break that one. This KO26 would probably be the one on the downside. Some of you may say, well, wait, why can't I place in these now? I'm one of those traders. I am a very much if this, then that trader. I wanted to move to an area where I believe that it will be a reversal or some type of turning. That's why I'm kind of giving you these the way that they are. You may be a trend trader looking to get in right now. That's not this style of trading. So this is kind of an if this, then that happens. And I'm looking for price to come up to this upper zone up here from anywhere from this basically 94 up to 94.50 range. I'm looking for kind of sells. And then down here inside of this 91.59 to 91 kind of 20-ish area, I'm looking for some type of reversal to the top side. Ideally, I'd like it to get to either of these two zones at about 10 o'clock in the morning. Get the bull and bear traps out of the way, jump in and start taking those longs or shorts. Okay, that's ideally what I'm looking for this week. Going to the S&P. Now you see the S&P on the daily, it's not in the same place, is it? Here's where the NQ is. S&P has been having a lot more problems down here. So I'm going to drop down in the lower time frames. You can see actually we're kind of approaching not only a 4-hour zone, but kind of a small hourly zone. Now, this is one of those things as traders, if you've ever heard anybody talk about consolidating price, this is kind of what we're looking at right now. Now, we had a great little level up here. And again, this white zone is a daily zone. We marked that off last week. We had a smaller zone that it was basically coming from the 4-hour, but we refined it a little bit. And that was up in here, this 90 or 29.65 range. As you can see, we have a price that didn't quite go as high. It actually got slowed down by this kind of pullback. It got tested and pushed down. So this zone right here, pretty nice. I like this one. And this one is coming in, like I said, approximately 29, probably 45 on, because these are always a little bit higher, to 29.53, 50-ish. you can see that price touched it and exploded away. It didn't quite make it again, came lower, came to the same area again. So it's been an area that hasn't necessarily been tested. Risk to reward wise, it does set us up at a pretty interesting little level, right? I mean, it's requiring about that much movement to the downside. We were pretty close this morning. We got up there about 2 hours ago. We got close, but it's what I would call being front run. It's still a zone we got to keep our eyes on, and there's some nice movement up there. The way to draw this one in your chart so it matches up exactly, go back to your hourly charts and mark that zone. And again, I can do it inside of Nadex for you guys real quick. It's as simple as this, guys. Go over to is S&P 500. Click here, click the little arrows. You guys will see this pop up, and you guys can see right there. There's the chart. Actually, it's still in there from last week that we drew, okay? There's that zone, right, up top. Now, that's the larger zone. The smaller one also, right? The smaller one is actually sitting right here, okay? Same thing when you click down here to get your drawings. You can go in here and either do horizontal or you can do rectangle. It really doesn't matter either way. I'll do the rectangle because that's what we had used before. Click, and I'll come across, and you can see there's the touch. I don't know if I can change this color or not. Nope, gray is fine with me though. So there's that zone that we're talking about. We got super close today, right? Super, super close today, and we're talking about, you know what, let me put some horizontals on here. Maybe I should have just done the horizontal in the first place. That probably would have been a little bit easier. So you're talking about 29.40 to 29.46. Had you guys played this one with knockouts again? Let's shrink this back. The S&P 500, you can see, let's make this a little bit bigger. Yeah, look, there's a knockout bracket right there. There was the 37. That one would have been a little bit shy. But again, there was this one, either one of these, the KO15, KO19. The KO19 is the one that would have worked out, but we needed just a little bit further. There was that KO47 sitting right there. So again, this is why it's important to keep these things marked off. It's great that Nadex is in your charting, it's actually saving these. So you could take it from either direction. Again, slightly off. You guys can see this one is at the 29.40, and this is what I'm talking about, ECN data, that this one is based off of about 29.46 is where like the same approximate level. So I'm off by about 4 on the ECN data. All right, so nice little sideways movement. Again, this basing area down here, it got front run off this, right? It's a front run off of this level right here. As you guys can see, it came down and touched it. So we're kind of in no man's land right now. Being that it's 12:30 in the afternoon, we probably will get some type of a surge. The problem is, again, you taking this with binaries or call spreads, the expiration is going to be an issue. Touch brackets are still good, top or bottom, and let's see what the touch brackets look like on the downside if we were looking to take a long out of that one. That area is approximately, let's see over here. Yeah, we can draw, oh, here, I'll take this horizontal. We'll just steal some of these horizontals and move them up. Duplicate it in that range. So you're looking at, looks like 28.97 to 28.90, right? 28.7 to 28.90. Let's see what we got on the downside. There's this 28, if it gets in there, depending on what it looks like and time of day and things like that, guys, there's a 28.97, which is really on the high end of this one, because that's 28.97 here. Like it won't even enter the zone. I think that the 28.87 would be a better of an option to probably get into that one. It's 3 points lower. And again, you have to be okay with that risk. And that would be KO19 down here, would be kind of the, a long situation from, again, taking this prior bounce. We had a little bit of a gap, price down, came down, launched off, came and retested, not only here, but came down and tested again. It would be moving, it would be moving this over to this area right here, okay? And actually, I guess I can change it. There we go. Something along those lines. All right. All right, so let's shrink that back down. Let's look at the third one. I'm going to switch back over to my charts. Dow-wise, again, Dow also kind of ugly. NQ's up here, S&P's kind of over here. Dow's a little bit lower. This one's busy because I had a bunch of things on it. I was actually working on something in this range. So had a couple different things. I had a short position in here that we're looking at with my students. We were looking at if price was able to kind of push its way. We were here last night. We were looking for price to push down and kind of what I would call that Harry Potter trade. We didn't get it to actually turn and reversed. Came back up and grabbed some levels. Actually, let me clear that one. Same idea, consolidating, right? Highs were not as high, right? Lows are not as low, and we're kind of pushing back in. It more or less is sideways today. If I had to look at this, I'd say, yeah, we've been more or less just kind of an up and down and up, and we're really in the same area. For me, same idea. again, along probably down in this zone. Again, we've seen price push back down into this level here and then push away. Hasn't been able to get back. And then same thing top side. There was a bit of a test up top, approximately in the 24.45-ish range. This actually does have a little bit of a front run scenario right here. And that one comes in a little bit sooner. And again, this is more for the a little bit aggressive trader. Price came up, it did tag that top level, but look at this. This is a nice push away. 5 candles straight down on the hourly. Lots of selling pressure, right? Lots of selling pressure. There's nothing to lead me to believe if price comes back up here again that we couldn't still have sellers that wanted to sell at the same level, okay? Got to keep that on your radar. Price is a bit away from it right now, though. Unfortunately, we're all the way down here. We're 200-something points away. Being that it's 12:30 in the morning, I don't know if we will get all the way back up there. So that may be something to keep on the radar for tomorrow. And again, tomorrow morning we have, with Powell speaking, there could be some fireworks. 8:30 tomorrow. Let's kind of see where price is. If price is up in this range tomorrow, somewhere up in this range before Powell speaks, a lot of times, if we are rallied into a zone before a speech or a data release, as I mentioned, that's a great time for a reversal to happen because the market kind of prepared for it, got price whether higher or lower, and then wanted to take in the opposite direction. There could be some amazing binary for tomorrow morning, particularly at the U.S. Open. If he's speaking at 9, I think that's, let me just confirm that before you said, hey, he was speaking and he didn't speak. Yeah, right here, 9 a.m. tomorrow morning. There could be some really, really great binaries, both on the 2-hour as well as the daily tomorrow morning, as well as some call spread action inside of that range. So that could be a fun one. That's definitely something. Keep that on your radar tomorrow. 8:30 Eastern time. Get up here. Let's see where price is at. Right now, we're no man's land. Not too much going on, right? All right. Let's go to the currencies. Let's move through these a little bit quicker. All right. So currencies, I've had a couple things marked off here in different levels, kind of bouncing back and forth. Larger time frame wise, we have this area up top that I have it marked off with a 2 teal, right? This is an area that we've taken shorts of twice already, okay? We are starting to approach it again, and this has been kind of moving with gold, right? I am kind of looking, I'm interested to see. The other two, I have rushed into this one to get short as soon as we hit the level. I want to see how we approach the zone. I just have a feeling with Powell speaking, the fact that we've hit this level twice, it wasn't as much of a push down this time. I have a feeling that this zone may be starting to get slim on sellers, okay? They're talking about adding additional stimulus. Additional stimulus is code for printing more money, which goes back into gold. Gold is associated with this currency that will also push this higher and devalue the dollar. So although we've had some sells off this zone, guys, and it's been great, I'm kind of worried about it going further. And I'm going to be a little bit more cautious the next time we get up into that range. We are definitely, without a doubt, approaching it. You can see here on the hourly, this one has been moving a bit more sideways. That is zone that we had marked off here, and I wanted to see how it would react. It is in the middle of a curve for me, so it was nothing that was actionable for me, but I wanted to see what the reaction was going to be. And I kind of saw it. It kind of bounced around, came a little bit higher, just bouncing. It wasn't as much of a kind of a hindrance as I was thinking it was going to be or could have been. Right now, the way that it's looking, you can see that we have a red, a green candle, and a red drive further. It looks to me right now that we are kind of in dollar strength mode, and we're seeing kind of this price push back down. There are a few levels to the downside. Nothing really actionable for me. As I said, I'm still looking for really kind of this range up top, right? This matters to me, the 65.46 range. We're not that close to it right now. We're sitting there about 45 to 50 pips away. This one has a daily ATR of 85. So it would take almost an entire day's worth of movement just to get back up to there when we were in a near-term downtrend at this point. So for me, I'm kind of looking on the lower time frames, like on the 30 minutes, looking for good levels to be able to get in. It's a little choppy. Right now, there's not a whole lot. I think the best thing to do on this one is we have a lot of 9:30 p.m. Eastern Standard Time news for Australia. I think that's going to be when to come back to this one and kind of see what we're at. I like this 30-minute level down here. It was a very, very strong drop at base, and then it rallied out of it. Looking for that zone as potential longs when price is able to get down there. And as I mentioned, I'm looking for this 4-hour zone up top, a little bit farther away from it right now, so we're kind of in a holding pattern. And again, that's just trading. Looking at Euro Yen. So Euro Yen is actually in that zone. Okay, we had this zone marked up top. It does have a good short going on right now out of that zone. This one, we also had kind of a break below that we were holding. And again, we're going to keep that one in there as something in the future that we are looking for. Right now, though, it looks like we are in a short pattern. Now, it is sitting inside of a smaller area of buyers, right? As you guys can see, right where this teal line is, we have some sideways movement and then a nice little pop out, right? It came back up, it tagged the top supply zone, it pushed back down, and we were kind of sitting right in that area, but I'm not seeing big pops. I'm not seeing price reaching higher. What I'm seeing is the highs getting lower, 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 and lower, and what it's doing is it's forming up sellers to break through this zone, okay? So the way that I'm looking to play this, probably later on today, and again, this may coincide with tonight as well, I'm looking for a break of this level and some type of a short, right? I'm looking for shorts coming through this zone. I want to see how it breaks through. Again, sellers could step in at this very, very last moment and offer a pop. I'm looking for a break of this zone to the downside. A couple ways you can play this one. This is not a touch bracket based pair, so you'd have to play it in binaries or in call spreads. A lot of times what I've been doing for this one is, again, it's got some great movement. You kind of need some type of a news catalyst to push it, unfortunately. So again, this has been more of kind of a nighttime type trade. You can see that during here that the candles are really kind of slowed down. This movement all started at about midnight Eastern Standard Time, and that's where this movement came in. This big spike right here that came down, this was Australian news. So you can see where a lot of the big spikes, like this here, happened at the basically like midnight European Open, right? U.S. session is a little bit more flat, okay? So it's kind of an off hours trading pair. If you guys are looking to do that one, then again, there's some sells and some buys in this one, but ideally, if you're new to currencies, you probably want to stay with the Aussie dollar, not necessarily the Aussie yen. Looking at Euro yen. So Euro yen, we had this nice little entry pushed all the way down to our target yesterday. That was something we had talked about. We actually set this one up last week that this zone was still be valid. It worked out great if anybody was able to get into that one. Again, this is one of those pairs I have a love-hate relationship with. Current price is now sitting here. So in this pair, there's a couple different areas. So we have a level of basing up top, and that's what we just literally bounced off of right here. And we are kind of pushing down, very similar to what we're seeing in the Aussie yen. It is also kind of pushing back down. It does not have the same retraces. I would say the same kind of basic principle. We go on off a higher zone, then it was a clean pop in. It is now retracing kind of this news kind of talk. I also see this one coming more to the downside. Entry on this one is a little bit more difficult, as you can see. Again, we had that zone marked off. A little bit of a speed bump right here. Again, not as super clean, but for me as well, I would say I'm bearish. I believe this is coming to the downside. We do have a zone that I had marked off here in pink, and that's kind of this range. I'm also looking for a break of this and a pullback down to 115.21. Okay. Unfortunately, we've had price rally away from that zone. And again, I was waiting for a break of that zone. It didn't break, no harm, no trade, no foul. Pushed up and grabbed some higher levels, which again was a clean level. You're in a short right now. If you're in it, wait for this one to come down. And it's actually probably pretty close to it's 3-1 now. Let me see real quick. Nope, not looking for text. Cancel. Fib tool. Yeah, we're well on our way. We're over halfway there to where our target is. And again, that's a great target if you guys were able to get short. We'll see how that one plays out. It continues down. So pound. Pound, we've had this one marked off. You guys can see the zone that we marked off last week has been pretty great. It hit, dropped down, came up again, dropped down, and then we missed the third entry on that one to the downside. Pound has been kind of also in kind of a sideways pattern, right? We have bottom, we pushed up, bottom, top, about halfway to the bottom, right? Kind of the top and back to the bottom again. So it's been more or less kind of chunked sideways. One of the things about the pound lately, again, you guys can see this over here, and this is one of the reasons why I use this tool. The pound, you can see in the last 24 hours has dropped 83 pips, okay? 83 pips. So is that a lot? Is that not a lot? Well, on the daily, the ATR is 129. So you can see it's kind of slowing down. On the daily, you can see there's a lot of small candles in here, and it's kind of consolidating, but overall, it's pushing down. Its last pullback was not as high. So I'm kind of thinking, hey, listen, we're probably going to push more towards this bottom. Here, let me go to the 4 hours, it's a little easier. More kind of testing these lows back down here. Again, you can see we've had a pretty nice push on a 4 hour. That's all what we've seen this morning. Okay, so I'm thinking that I'm bearish biased on this one, looking for an entry, but we've had quite a push down since the European Open today for a number of different reasons. There's going to be a small kind of hiccup. I'm waiting for that pullback to occur. I'd like to see a green candle and a pullback, and then looking to get short the position. You can see here there's been a little bit of a pullback, and it's kind of pulled through, right? Kind of a little bit of a push. So yeah, as you guys can see, impulse correction, and then we're back in that impulsive move again. First time we really run into major problems is going to be down here around the 131.61 area. So, is it great? Nah, not really. I mean, we'll see. This one's already well on its way. Pound dollar, kind of a similar situation. I've had this one. So this is one of the questions I have for you guys. These are the touch bracket pairs right now. I've marked them off, and actually I had them printed before, and I wanted to kind of have it matched up. So this is option 1 for touch brackets, okay? Here's the distal side, here's the proximal, or basically here's the ceiling, here's the floor of the touch bracket. So you can see, for the most part, it looks like we're getting close to breaking this one touch bracket. And again, I wanted to kind of see what you guys prefer visually so I can help show these a little bit better. I know throwing the prices on a little bit harder, and I'm actually working on a little bit better of a method, but right now, these are where basically where the knockouts will occur, okay? You guys can see we have a teal area marked off, and I believe that came off the 4-hour. Yeah, that was our 4-hour. So we actually have a 4-hour zone sitting right here on this distal level. Now, the pound is obviously pushed down very, very far this morning already, right? The last 5 hours, 6 hours, it's basically come straight down. It is kind of set up for a bit of a retrace. 4-hour levels, in my opinion, are great, great levels in currencies. We are approaching a 4-hour level buying zone right here. Okay, that's where the dotted line is. This is the hourly chart and it's overlaid with 4-hour zones. We actually have a touch bracket sitting right here that the kind of knockout level is at 22.56. Okay, that knockout level, let me go down here and click on Forex. Let's go to the pound. This a little bit bigger. Let's kill the chart. You guys are able to see right here, 22.56. KO3 is that knockout. Now, is it counter trend? Yes. The last time price was here, did it turn around? Yes. It spiked in, hit, and turned out. Is the risk rather small on that level? Sure, it is. It's only about it's about 25 pips on here, but we can wait till we get a little bit closer down here, and again, drop it to a 30-minute level, whatever level you're looking at. But we do actually have a knockout bracket that kind of makes sense for this position. Not too bad, right? Not too bad of a position. I don't mind this one. So if you guys are looking to get into a position long, I would actually recommend on this one going the touch bracket route. The problem with the binaries right now, or the call spreads, is it's already 12:30. We're running out of time. Okay, we're going to have an expiration in a few hours on that one. It may actually not have enough room, not enough time before expiration for a binary or call spread. So it's kind of more of a knockout play because, again, until it hits those prices or we hit Friday, the knockout bracket stays valid. Okay, so this is also kind of a knockout type of situation. So this is kind of one method that I was going to start using to see, again, to give you guys more of a graphical representation of knockouts. The other one would be over here, and I think I did it on, where is it? Would I do it on the Swiss? Yeah, I did it on the Swissy. Now, I don't know if you guys can see this or not, but I have lines printed right here. This one may be a little bit harder because it's harder to see the prices, but you can see on the right-hand side where the knockout brackets are. Maybe if I made these darker lines, that may be a little bit better. But anyway, you can see right now where the Swiss is. The Swiss actually just came off of a knockout about 2 hours ago, okay? The Swiss knockout, again, I had this one up earlier. The Swiss knockout that is closing at 96, where is it? 96.58 is sitting right here, this KO3. That's what we just bounced off of in this range, okay? So it's about 36 pips up on that knockout. Again, it got very, very close. This is ideally when you like to get into these, when you have the lowest risk possible, but not too low to where you're gonna get chopped out. This one's moving away, and the Swiss more or less is sideways right now. Again, if I stretch it out, you can see we had great movement over, from last night, really. We kind of hit this zone and fell away. We've reversed all the way down to a buying area, and that's what we're bouncing off of right now. So it's moved so far away. Again, if you were long, you're probably good till you get back up into this range. I'm kind of in a holding pattern right now. I'm going to wait till we get up to 96.16. There are potential shorts coming in here, or profit targets for your touch bracket down here if you aren't going to hold it till expiration. Tomorrow morning, when Powell speaks, the Swiss actually tends to be a pretty good pair that you can use for this one. Why? Because again, the Swiss is kind of a flight to safety for most things. Again, if Powell brings anything up about China, trade war, anything else, that tends to loan some strength into the Swiss. So one scenario that I'm looking for tomorrow morning is a rally back up into this 96.16 range to 96.25, 30-ish range, or maybe even higher. If we can get up into either of these two ranges before Powell's speech tomorrow, I'm going to be looking at potential shorts. I have the entire day to be able to play binaries. He brings up anything about trade war, anything else like that, that will loan strength over to the Swiss currency pair, and again, drive this position to the downside. So there are, again, here's the long from this morning, two potential short areas here, as well as sitting right up here. Okay, euro dollar. So euro dollar, we've had some great movement this morning so far, and now it is starting to turn and retrace. Unfortunately, the euro is also one of those pairs that has not really kind of lived up to its biggest potential. It did bounce off last night, one of its 4-hour zones. Unfortunately, right now, it's actually not going high enough top or bottom. As you guys can see here on the daily, the ATR is really just kind of collapsing and coming back down to what its average is. So here's the daily chart, guys. You can see we had this major swings with all the COVID-19, and now we're starting to kind of box inside of a smaller area. Look at the last couple of days, just not as much movement. The ATR on this one is down to 82, so it's starting to get smaller and smaller and smaller, and this is what we're kind of seeing. We're seeing bouncing back and forth, and we're not even getting as far as the zones right now. We're sitting in no man's land, kind of sitting right in the middle between high-quality sellers and high-quality buyers. So not much we can do right now with the euro. Later on the week, again, what I would do is go down to an hourly chart. Again, for any type of news releases, there are potential shorts coming off this area. Basically at 109. 109 is a big psychological number as well. We got some zeros sitting there. That's the last time we really saw major movement in price to the downside. Now, on the flip side, on the bottom, I do think we have some room to run on the bottom. There's a few basic levels. I think this could potentially, by the end of the week, get back down to 107. It's going to depend on what Powell says tomorrow morning about stimulus, no stimulus. Just keep your eye on that one. No, for me right now, there's nothing I'm really looking at this and saying, yeah, I love that one. Right? To me, it looks like price wants to come back down and really kind of push back into this 107, 108 area. To me, that it wants to drop that 50 pips. I just don't see anything in here that really is going to slow it down to the downside. Euro pound is another one. Euro pound has obviously been on a major spike. It actually went into a level. It was on 4-hour. You can see it right here. I'll zoom in so you can kind of clear that out. Right there is where current price is right now, and you can see it has rallied up. To me on this one, it also looks like we're going to have some European weakness on this one. Just like with the euro dollar, it looked like we're going to have European weakness, dollar strength pushing it back down. This position is also set up the same way with the euro pound. It looks like we're going to start pulling back from this 4-hour level. The last time price was here, it was driven back down by sellers. It looks like we're in that same area again, kind of probably pulling price back down into probably this area, probably kind of right smack in the middle, most likely this 87.70 range. This is not a pair that everybody trades, particularly if you were newer currencies. You may not be looking at it as much. You may just be focusing on, the euro, dollar, pound, dollar, yen type pairs. So, it's all right. Like I said, we're in an area right now where there are some shorts coming in to the market, and you're seeing some red candles as well. And again, we'll see if this bases or if it continues to collapse back through. But any type of short, I'd be looking at 87.70. Again, if you're playing this in binaries or call spreads, make sure you're watching your expiration time. We only have a few hours left today. If we can hold this till afterwards and we get new contracts for tomorrow, there are some shorts here, but it's going to depend on the next few hours. Okay. Euro yen. So euro yen, this pair has just been driving me crazy. We have this area, this big kind of orange box. I'm looking for this to retrace back down again. Been looking for some entries. There was actually an entry here, right here, kind of a pullback entry. And that's about the cleanest thing we've had. Since that time, there really hasn't been too much. Looking at this one on an hourly, you guys can see this has a major move up, right? Let me delete that so we just get a little clearer picture. Major move up. There's a big, big hole sitting right here, okay? I am in the kind of mindset right now. I am looking for this hole to kind of refill, okay? This is too straight of a direction with not a lot of earth-shattering news. Typically, what that means is this is an emotional response. Typically, emotional responses get retraced. Look at this big spike up. It's not like we've cured COVID in the last 5 days, right? But we've had a big spike up. We've also gone back into a level of basing. For me, right now, I am thinking bearish, okay? I am kind of going bearish. On the 4-hour level, you can see that there was a top put in, and it came back and retested, okay? So there was a short opportunity late last night, and that's kind of what the trade setup for me right now is looking like right here. Okay, we came back and retested it here on the 4-hour about 8 hours ago, and now we're seeing a drop. You guys can see it right here. Okay, right here is where we hit, and that would have been about 2 o'clock this morning. Okay, it's kind of doing what I expected. I assumed that it would stop right here. If we get a break below this level, there are some strategies that will have you continue to short as we break below those lows. I actually don't think that would necessarily be horrible if that is your strategy. If you're able to kind of put in, risk that matches your risk profile, That break for me is down here at 107.22. So, I think we can continue to push a little bit lower. Again, I do have overall targets down here by the end of the weekend. The probably mid 106s is kind of what I'm looking for. All right. So now those are the currency pairs. Let's switch over to what I would call the fun commodities. All right. First things first, let's look at gold. Okay. So there was an amazing gold setup earlier this morning that happened about 2 hours ago. Look at this thing spiking up, tag an hourly zone, and actually I think it's a 30-minute zone as well. Yeah, no, it's an hourly zone. You guys can see that this thing hit and bam, has collapsed. Okay. Gold overall, and I'm gonna say this right now, gold overall, kind of busy with a lot of these numbers. These were touch brackets from last week. Whoops, let me go back and Control Z. I'm not gonna pull that one. All right, let's take that one off. Let's go down to a lower time frame. I'm gonna pull some of these numbers out here. Overall, okay, this pair has been more sideways than anything else. Nope, I don't want to move that. I want to move this. I'm not gonna be able to grab it. All right, let me put this up. Take this guy out. And then move this back down. Okay. Overall, gold has been more or less sideways. We've really been hovering around this 1700. Okay, we've been up, we've been down. We've been really kind of focusing on staying. And again, I drew this last night for my students, but this is something to keep in mind with gold. Okay. We were in the zone, we went out, we came back down. We came back up, we touched again. We touched again, we bounced, we came up, we touched again, we kind of wicks back and forth, came low, came back up, stabilized. Went up, touched, stabilized, up, touched. So this 1700 figure, guys, has been something that has just been sucking price in, and we haven't been able to really kind of leave that area. Okay, so a couple different ways that you can play things like this in gold. Okay, we can drop down to lower time frames, and this is what I recommend, is drop down to the lower time frames and look for explosive movements. Look for candles, large bodied wicks. And what do I mean by a large bodied wick? And again, if you guys didn't know that Nadex event, if you guys saw the email for today's webinar yesterday, we're having that education event at the end of this month on May 27th and 28th. I'm actually going to talk about basics of technical analysis, candlesticks, bodies, wicks, multiple time frame analysis, gaps, all that'll be on Monday. So if you're not sure what I mean by kind of large bodied candles and what that actually means, you want to make sure that you register for that. But what I'm doing is I'm looking for large, strong moves. Is this sideways movement strong? No. Is this pop up and that reversal strong? Yes. As you can see, again, I have the overlay on here. I can do this on an hourly if you want. But as you can see, price touched this zone, got hammered away, right? Touched it, pushed away, came back up, got front run, came back up, pushed away, boom, is pushing away. It's these type of movements that I'm looking for, okay? Now, is that zone good for one more? Probably, right? Probably. There's a zone sitting right up there where there's some strong movement. Higher, is there also another area where there are good potential shorts? Yep, right here. All right, let me change this to black so it's a little bit easier for you guys to see. Okay, I like the range up here at about 1719-ish. 1709 is another one. Downside, I'm liking this area down here. Okay, when price was here, it launched itself. Now, these wicks didn't get as far. There are some buyers in here, but remember, we want clean. We want, we want the kind of extreme ranges. If you guys are familiar with what Bollinger Bands are, they're using moving averages and talking about statistically significant moves. When it breaches those, it comes back and reverts to the mean. I'm kind of looking for the same thing here. I want price to go higher or lower. Okay, during the day though, when we're looking for trades, we can drop this down even lower. What this is showing me is not only do we have this area up here at 1709 that looks like it's going to be a sell next time, right? Looks like it's probably going to be good, but we'll see what time price gets there. It also looks like we may have something down here. And again, price spent some time here, boom, 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 popped out, got retested, and hasn't come back since. This kind of makes our targets and ranges a little bit smaller, dropping it lower. So would I be looking at the gold 15-minute chart at 9:30 or 10 o'clock at night? Probably not. But would I be looking at the same 15-minute chart at, say, 10, 11 o'clock in the morning when U.S. news is coming out? Yes. Tomorrow morning, should you be looking at this, at where the levels are and where price is before Powell speaks? Yes, 9, 10 o'clock tomorrow, there's probably going to be some nice little setups in this one. That's what my prediction would be. So again, 1709 is an area I'm watching. Also 1695 down here. Again, shorts, longs, those are the areas that I'm looking for gold. And again, we had this lower zone down here at 1686. Those are the levels that I am currently looking for gold. All right, silver. Silver, kind of the same thing. This is an area marked off last night. Look at this. Touched, down, up, touched, all the way across. You guys can see this, down, down, down. It's the same thing. This one is between 1534 and 1513, a 30-cent range. It just can't break it, right? So the way to, and this is a 4-hour chart. So the way to play this one is also on the lower time frames. Now, silver, not as exciting, right? I know everybody loves gold. It's not as exciting. We had a short here, made it about halfway, didn't quite get there. Kind of the same idea. Look for explosive moves in this one. I think hourly is probably the best ones to use. You can see the last time price was down here. Actually, let me delete this this box right now, and let's go down to the hourly, and you'll kind of see what I'm talking about. We are kind of in the middle of the range. Price is having a very, very difficult time with this range right here. Okay. It based, it came up, it touched, it popped. It popped again, it came over, it popped again, and it's barely making an headway. So 1528 to 1520 looks like a potential buy area for me. Vice versa, last time price was up in this range, and again, this is an hourly zone, okay? Last time price was here, you can see the price fired itself down, pushed all the way down, came up, touched, boom, and it hasn't been there since. So looks like we have some sellers up top. Tomorrow morning, could we be looking to see if we're up in the 1575 range or down to the 1528 range? Yeah. Do you want to play in this chop? Not really. And again, this is where patience comes in, top and bottom. All right. Those are the two zones that I'd be looking for as far as silver goes. All right. Last but not least, let's go into the fun one. Let's go into oil. So, courtesy of TradingView right now. And again, I was over on Daily FX and I pulled these charts up from Daily FX to get this up. You guys remember, again, on a daily basis, let me go back up and I'll bring this a little bit higher of a time frame. We'll go to 4 hours, okay? This is what I was talking about, which is kind of an interesting situation, right? This is where we saw oil dropping last time. You can see right about the 12th to the 13th is where it started to pick up steam. And then right around the 20th is where the thing just tanked through, right? That was the final couple days before expiration, okay? We are now, if you guys look at today's date, we are at the 12th, right? Well, over here, the 12th of last month is where we started to see a decline happen. We saw that we had the high approximately the Wednesday before. Well, here's our Wednesday before. We were not even as high as where we are. So I'm looking almost for history to repeat itself. Now, if we have a similar situation, and as I said before, I do not expect oil to go all the way to zero again. But then again, I said last time, oil can't really go to zero, but I guess technically it could, even though trading wise, it didn't. We'd already rolled over in the June contracts. Could we see oil do the same type of thing again? And you have to think, has a lot changed in the last 30 days? From here to here, has a lot with the economy, with COVID-19, with everything else, has a lot changed. Yes, states are starting to open up, right? But has the full economy returned back to where it was? Has demand returned to where it was? My personal feeling is no, it hasn't. Okay, so on a lower time frame, I've marked off this level right here, top and bottom. Okay, the last time price, again, I talked about those big spikes. You see price spiked down, it came back and retouched. This was oil inventory reports. It literally paused before oil inventory, bam, slammed into this bottom zone. Okay, that bottom zone also came down, stopped, it ran into buyers, hit it again, and went all the way back up. So we've gone from this top section, which we marked off previously last week at this Nadex presentation. This was an hourly zone from a month ago, 2 months ago. So this was the first touch. We've hit top, bottom, and now and again, bottom, and we're kind of stuck here, right? So I'm using these two levels, 27.35 and 24.78 as levels where I'm looking for buyers and sellers. Tomorrow we have oil inventory reports. If those numbers come in pretty bad, and we're testing these bottom levels here, this tomorrow could literally be where the high is for this expiration contract. We may see price spike up in this range, and we'll see. Who knows? Maybe they have a huge miss and we're able to blow through the top. Again, remember, this would be touch number 4, and that's where we tend to see breaks. But if we're unable to break through this zone, we're starting to come back into this. Okay, and again, it's kind of big, but you guys can see, right? This is where we have, this date last month, we were sitting right here. Actually, let me go up to hourly. Makes it a little easier. Okay. Here is the 12th from last month. And you can see we're starting to have that acceleration down, down, down. Okay. Could we see ourselves back in the $20 range? Sure. Sure. Could we see ourselves in the $10 range? Maybe. Maybe. Okay. Like I said, I do know that we've had sellers step in every time that we come up in this $27 range, and it's happened 2 other times before in the past. So I have to think that it could happen again. And downside, same thing. We've seen buyers step in. Will those buyers still exist as physical delivery of oil and the June contract expiration is coming into play? Okay. That's a big deal for me. All right. So with that being said, guys, let's go back over. That was our last chart really of today. And again, what I want you guys to do is mark off your calendars next week, May 19th, 12 p.m. Eastern time. Catch us again. We'll kind of see what oil is doing. I think there could be some really great excitement. Make sure you guys are watching Powell tomorrow morning. Powell is the guy that will say the S word, stimulus, that will affect gold. It'll affect all the indices. It'll affect the value of the dollar. He is probably, besides like Warren Buffett or Donald Trump, he is the guy that will make the markets move. So we're sitting on a potential powder keg tomorrow. If he mentions stimulus, QE, not doing any of those things, he's the guy that makes those numbers move. So make sure you catch us. And also make sure you guys mark down your calendars for May 27th and 28th. It is a new summit that Nadex is putting on. It's 2 days, multiple speakers, 4 sessions each day. It's going to be an absolute blast to be a part of. And I will be doing 2 presentations for that one, an advanced one and a beginner one. So I hope to see you guys then. If you guys have any questions with anything I talked about today, let me see if there's any questions. Yep, looks like cup and handle. Cares are more attractive because the strikes are predated. Yep, absolutely. All right. If you guys have any additional questions, you're more than welcome to message me at keeptradingsimple.com. You can do the old-fashioned method, guys. You can do the email method, right? support@keeptradingsimple.com. You can join Discord. You can ask questions. Again, you can follow the YouTube channel with those replays. Make sure you're checking out replays on Nadex as well. Thank you so much for joining today, guys. I will see you next week. Good trading. Stay safe. And I'll catch you guys later. Take care.